Successful traders always follow the line of least resistance. Follow the trend. The trend is your friend. Jesse Livermore. My friends, the friend is always your trend. And all things being equal, the markets tend to move in the direction of the largest chart. That is our weekly chart. And what have we seen happen over the course of this last week? Very weakly, at the end of the week, we saw the S&P 500 complete a weekly vertical crossover. It had been preceded earlier, just a little bit earlier. To be exact, it happened back on the 12th. That was Monday of this last week. We saw the two-day crossover going up. Now, check out the candle that we have for the week. You can see it's covered by the weekly trend, the weekly vertical crossover, and the two-day crossover, but it is a green up candle with a wick on top, about a third of the size of the candle. And again, it's just pulling through. Earlier in the week, it had been much stronger pushing through, not so strong at the end of the week. And it was a down day, 0.06%. We see the price percent oscillator is still negative. Now, those of you who decided not to pull the trigger on the practice trade, we talked about this yesterday. You can, of course, continue to monitor. We'll talk about that. Let's go through, see what we see. I've told you where we are with this weekly vertical crossover on the S&P. We see a weak weekly vertical crossover, W-E-A-K, W-E-E-K-L-Y. We see the derivative oscillator still negative. We do have a green up candle for the week. We look at that two-day. Now look at this. Let me move the weekly out of the way so you can see. We have a completed two-day candle. It is a red spinning top, close to being a doji, long wick on top, a wick about, maybe 2/3 of the size on the bottom. So again, some indecision there. Price percent oscillator not heading up strongly. Derivative oscillator gaining upward momentum, but it is positive on the two-day. And what do we see on the 4-hour? It's moving down. Now, for those of you who did not pull the trigger and are waiting for some additional confirmation, what are your options? Well, the only option you could have on pulling the trigger at a later date, since the two-day is still moving up, would be, of course, for this 4-hour to cross over going up. That is the weakest of our signals that are generated. But when you look at how the half-day chart, and I think I just called it 4-hour, it's actually 195 minutes. Markets only open, from 9:30 to 4 every day. You can see that it's been fairly accurate lately. So again, if you wait for it to cross back over going up, and again, we're doing some backtracking there, looking at how it's been doing lately, you could wait for that. I'm not discouraging that. You know what I'm encouraging? I'm encouraging you to practice trade, to learn, to be sure that you're in the market as much as you can with your practice trades because they don't cost you anything. And the special training we have for all of our subscribers this weekend, is how to use our daily market worksheet for explosive development. We're going to launch on Monday how to use the trade worksheet. Remember, all those worksheets are in your show notes every day. They're PDFs there for free. So please print them out and use them. And over the weekend, take down this training, yesterday we put out how to use the weekly market worksheet. If you're not a subscriber, you're not getting these trainings. How do you get them? You go to chartingwealth.com, put in your name, email address, and subscribe, and boom, they'll come to you every day, 5 days a week. And again, that list is never spammed, never shared. That's where we are on the S&P. Now, let's leave there and go to the Qs. That's the Nasdaq 100. What do we see there? We see a green up candle for the week, but we don't have a crossover. Price percent oscillator is a little more than flat, but just about flat. Derivative oscillator still negative. Go to the two-day chart. Again, just like the S&P, we had a two-day crossover back on Monday the 12th. That represented Friday and Monday of this Friday of the week before and Monday of this last week. And look at the week doji is what I would call this. It is Let's zoom in a little closer. Almost totally a doji. We see that it has pulled through the 2-day trend line going down. Price percent oscillator just barely a little more than flat. Derivative oscillator heading up. So again, we do see some weakness here. Now that is weakness in the continued up move. We go to the half-day chart, and of course it peaked all the way back on Monday the 12th. That's where things peaked, and it's been rolling over sideways since then, well, down and sideways since then. Price percent oscillator spiking over, going down, derivative oscillator going down. So let's just see how much life is left in this up move. We'll continue to watch and see over the course of this next week. And again, what are we looking for at this point? Put this in your notes. We see that the 2-day is possible to recross over going down. If we have a 2-day recross going down, the weekly's already primed for that. We'll be ready to jump into a down move if that happens over the course of the week. When's the soonest that could occur? Well, again, we just completed the latest 2-day candle. Let me go back to that. The prior one was on Wednesday. This one represents Thursday and Friday. So the next possibility would be at the close of the market on Tuesday. So pay close attention. Now we're going to go back to the weekly. We're going to leave stocks and go to bonds. Oh, by the way, the Qs was down 0.55%. Bonds are down 0.28% for the day. How did we end up this week? Well, it's a solid green spinning top. Indecision, again, tending a little bit down. It is a solid green. It's not an open box, so it's a slowdown in the down movement. It's not a red. So that is, of course, down movement for us. Solid green is a slowdown in that down movement. We can see that also in the price percent oscillator, not heading down at the prior angle. It shaved off a little bit of that downward momentum. We see it also in the derivative oscillator that's lost a little bit of downward momentum. And then we go to the 2-day chart. It's about flat on the price percent oscillator, derivative oscillator losing energy. And we see, again, 2 up candles representing 4 days of up movement. So we're continuing to watch what's going on there. Remember, the weekly and the 2-day are still in confirmed down moves. What's going on that half-day chart? Well, we have basically, as we look at things, 1.5 days of down movement after things had moved up for several days, peaking back at in the morning on Thursday, down Thursday afternoon and Friday. So again, you have a potential opportunity to jump into a renewed down move if there's a crossover going down in the half-day chart over the course of this next week. Note that in your show notes. Remember, the 2-day and the weekly are primed. Now, we would rather have a weekly vertical crossover. That's our number 1 method for jumping in. Number 2 are 2-day recrosses. Not a real fan of half-day recrosses, just not. I just tend to stay away from those. But I'm not discouraging you practicing it, learning what there is to learn here, seeing how it works, and of course, looking back in time and seeing how accurate those half-day crosses have been, or half-day recrosses in the same direction as the weekly and the 2-day. Those are things that you can look at and explore to give you some idea if the potential chart you're looking at. Remember, all charts have their own personalities. Not everything that works on one chart works on another. That's why we do this every day, 10 to 15 minutes. That's why we fill out the weekly market worksheets, trade worksheets, and daily market worksheets to learn the nuances of each particular stock or ETF that we follow. So the things you learn here with our 4 ETFs, the S&P 500, Nasdaq 100, 20-year bonds, and gold, you can apply to the stocks and ETFs that you might track. That's where we are on bonds as we end the week. What about gold? It was down, everything down for the day. It was down 0.35%. Now, as we zoom into the weekly, what's gold doing? Remember when all the gold bugs were telling you gold was going to go up to $15,000 an ounce? That's about the time gold peaked. It always is, isn't it? And then what did it do? Well, gold peaked and then started moving sideways and down. We had our weekly vertical crossover going down back on the 11th of September. And of course, our peak down move was the week of the 25th of September. Since then, it has been sliding sideways this week. a red spinning top, almost a red doji. So indecision tending down. Look at that price percent oscillator. It did gain some downward momentum. Derivative oscillator also did. We go to the 2-day chart. Less than flat heading down. We can see that we had 4 days worth of sliding sideways down movement. Derivative oscillator losing downward momentum. And again, I'm going to put at the end of today's training the derivative oscillator training we have so you understand that better. It's a triple smooth version of the relative strength index. It is our leading indicator. I want you to understand how to use that better. You'll understand that better by taking that training and also by reading our book, which you can buy. Follow the link in the show notes. We'll send you an autographed copy. So that's where we are on the 2-day. It's heading down. We go to the half day. Now, it tried to cross over back in the afternoon on Thursday, and what did it do? It sort of bounced off that, moving away on the morning of Friday, a little further down on Friday afternoon. So again, we'll see where that leads us. Again, that is a bounce over. Was there a potential jumping in point maybe around noon today? Possibly, but again, I don't like these 4-hour recrosses and stuff. So we'll wait and see how gold settles out as we move forward. Now, of course, don't discourage you from practice trading that. The time, of course, to jump in would be when that 195-minute candle closes and the new one starts. When you have a push away like that, what we call a bounce off the signal line. So that's where we are as we end the week. We always appreciate your questions, problems, and concerns. You can email cw@chartingwealth.com. Be sure to sign up at the website for our daily reviews and our once-a-week weekly review and forecast with all the special trainings in it, the daily market worksheet, weekly market worksheet, and trade worksheet PDFs, and of course, all of the other information we have to share with you. We use for our tracking technology here, the charting technology we use is TC2000. There's also a link in your show notes for $25 off when you get serious and want to subscribe for what I think is the absolute best charting platform out there. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.